All right, so it's Wednesday, the 18th, and today what we're talking about is the Fed rate cut. I'm Andrew Gavin, a California mortgage lender, and I sell real estate here in San Diego. So a lot of people have been following along. I've been talking about this about 2 or 3 weeks ago. The data that I was seeing and the people that I follow were pretty much 100% convinced there would be a rate cut today. And it did happen. And we were expecting potentially a 25 bip or 25% rate cut. We actually got a point, 50 basis points or 50% rate drop from the Fed. You can see in the background, rates went up versus down today. Here's why. When the Fed makes a rate change, it doesn't always react with loan rates, especially loan rates. The Fed rate actually is based on the daily rate, where mortgage rates are long-term. But the two are connected in a very specific way. They trend together. But we are working with lenders who also add margins, make changes, and the lenders for the last 2 to 3 weeks have been slowly lowering their rate to try and collect as much early business from this coming rate drop as they possibly can. So what we saw today is a reflection of that. The rate drops that could have been affected by this 50 basis point Fed drop, we've been seeing those come into play every day, a tenth of a percent every other day for the last 2 or 3 weeks. So today we saw a little bump in rate. It went up not much. Like I think we were at 6.12 and today we're like 6.15. It's not enough to worry about. But this is a good sign for you as a consumer to realize that follow along with the people that you trust. If they're saying they believe that rates are going to drop or move, or if you're working with the lender and he's saying, hey, I think you need to lock your rate because of the volatility in the market right now, it's probably a good idea for you to listen, especially if you have a potential loan on the line, because we all want to make money. There's no question about that. But the information that we're sharing, hopefully it's not coming across to you as trying to use fear of you ending up paying more or missing out. That's the goal. But from where we're at, we see a lot of buyers hesitant because it is a scary situation. And ideally, we would all love to time the market better and sell our house at the highest price possible, get the lowest rate possible, and purchase a new house hundreds of thousands of dollars under its value. But that perfect storm never, ever happens. It's actually probably impossible. But as industry veterans, we see this all the time, people trying to time the market for 1, 2, or all 3 of those situations. Here's a situation for mortgages that we've been saying for the last 2 or 3 weeks. Rates are dropping. If you're planning to buy or refinance, get ready. If you want to buy a house now, rates have dropped over 2 points lower than where they peaked at. This is a great time to buy. A year ago, everybody would have been wishing they could get a 6.15% interest rate. Today, now that it's there, I guarantee you there are people thinking, let's wait till the next meeting. Maybe it'll go lower. Let's wait till spring. It'll be even lower. And it possibly could, but it could just as easily go back up. Here's one thing, though, that I believe will happen, regardless of rates going lower or higher, is this 50 basis point drop is enough to inspire hundreds of thousands of buyers to get back into the real estate market and look for a home that they want to buy. And what I've been telling people and what I will continue to say, especially here in San Diego, here in California, our prices are only going to climb. We could definitely see a little bit of a roller coaster, but it's going to be climbing like this. It's going to be going up versus dropping. So you right now we are in a sweet spot, which is good. We've got interest rates lower than they've been in the last 2 years, I believe. And we've got home prices that are stalling. They're not dropping so much, they're stalling. And we've had a stall in buyer interest. But this rate drop is definitely going to inspire some people to come back. So if you are serious about getting a property and buying a house, now could be a really good time to get serious. You're going to get a really good rate, one that you haven't been able to get in a long, long time. You're going to get a house that potentially you could negotiate a really good offer for because that seller might have been on the market much longer than they had expected. And you could definitely buy a house today that's going to be at a purchase price less than it will be in the new year, in spring, next summer. If you want to talk about a refinance as well, if your interest rate is, let's say it's 6.5% or higher, we should talk about figuring out how to get you a refinance and how we can potentially do that with zero money out of pocket and save you thousands on the refinance, as well as potentially hundreds every month you make your mortgage payment. Have more questions? Please reach out.